Hey everyone, and welcome back. Now today I wanted to talk a little bit more about Bitcoin and the institutional interest that we're seeing, both through the ETFs as well as directly on chain. So let's go ahead and dive right in. So the first thing I wanted to talk about here was the Crypto Fear and Greed Index. Now the reason I keep coming back to this is because I think it's pretty important in terms of discussing and getting a general sense on where we are in the market overall. As we can see right now, we've been pretty consistently in the fear, occasionally dipping into the extreme fear for the past couple of weeks at this point. And why that's important to notice is because if we look historically, I've pulled this in to cover essentially anything from the end of 2020 up to current. So just shy of about 4 years. But as we can see in the last 4 years, when we look at these sustained periods of fear and extreme fear, the price of Bitcoin is usually near a bottom. Now, I would not say that we've necessarily seen a sustained period of fear so far, but it is kind of trending in that direction. Now, the thing that's important to notice here, and the reason why I bring this up, is because if we look at the points in when we've seen somewhat extended periods of crypto sitting in the fear or extreme fear category, usually the prices are half to, a quarter, maybe a third of where they are currently. That to me in itself is optimistic, looking at where we're at in the market, because what we're seeing is there's a lot of fear and uncertainty within the market, but the price of Bitcoin that we're seeing is, 2 or 3 times where it has been historically when we've been in this similar point, at least when looking at the Crypto Fear and Greed Index. Now, one thing that I think is going on right now that I think, a lot of the normal investors like you and me need to be aware of is, why is this happening? And why are we seeing so much fear while theoretically, the price is still holding up relatively well? We're starting to see a little bit of weakness from like a technical perspective, in the sense that Bitcoin keeps getting lower lows and lower highs, but we haven't necessarily seen the market switch into like an official bearish downtrend, right? Like we are still in the position where we could potentially be looking at like a bull flag or something like that, as far as like a technical structure is concerned. What I think is going on is I think there's something bigger at work here. And the bigger thing that I'm talking about is institutions. Now, if we go to this next page, we can see this dashboard that was created by Hill Dobby. And this is essentially like on-chain data for Bitcoin ETFs. So what we can see here is a lot of interesting stats. The first one I wanted to point out is this number right here. So what we can see is, since the launch of the ETF, which happened on January 10th, we've seen an additional 300,000 Bitcoin flow into institutional holdings. Now, that brings us up to a total of 926,000. So just in this year alone, we've added almost 50% to what the previous Bitcoin holdings were over the past 13 years of Bitcoin existing. So this is something that I think is pretty interesting and very optimistic to see. What we can see here is the institutional holdings are actually approaching the balance that is in Satoshi Nakamoto's wallet. So we could be getting to a point where institutions actually hold more Bitcoin collectively than Satoshi does, which would be kind of a crazy day, if and when we get there, I think. Another thing that I wanted to show is, we've seen $55 billion essentially poured into on-chain holdings for institutions. This is obviously no small amount of Bitcoin. This is a very considerable amount of money. And this is something where we have really only seen, 2 quarters worth of data so far from institutions. Usually institutions work very slow. They've got long and laborious due diligence processes, as well as, these companies in often cases are billion, sometimes trillion-dollar machines that have a lot of, red tape, compliance, a lot of various things that they need to be doing on their end to make sure that their investors and their stakeholders are safe. So I would think that we actually see this amount continue to actually ramp up, not slow down as time goes on. So, we could be getting to a point where, institutions currently only hold about 4.7% of supply. I do think there's a world in which we could see them holding 10, 15% potentially. And if we have governments starting to get involved, like has been thrown around with like the US forming a Bitcoin strategic reserve and trying to get that to 1 million Bitcoins, we could realistically see one of two things. One, or maybe both, right? One would be a massive supply crunch because nobody wants to sell their Bitcoin, but everybody wants to buy them. And two would be eventually, I think we could see institutions and governments holding 40 to 50% of Bitcoin. We can get into the more philosophical discussions on whether that's a good thing or a bad thing in some other video. But realistically, from a pure price appreciation perspective, we could see the amount of Bitcoin held by entities 10x potentially. entities meaning, institutions and governments. And if that were the case, this is where I think we would see some pretty ridiculous price appreciation. But as we can see, ever since the ETF is launched, obviously, we've seen days of outflows here and there, but as overall, the net inflows have massively outweighed the net outflows. So this is something that I think is going to only continue to get larger and larger over time, but it's definitely something to keep an eye on. I mean, BlackRock has been in the space for 6 months at this point, and they already have $20 billion worth of Bitcoin. That is a little bit ridiculous, right? So, I can see over the next, 5, 10, 15 years, I mean, I think these values go up not only just from price appreciation, but also additional accumulation of Bitcoin. Now, before we move on to this next chart, if you're enjoying the information in this video, please do give me a like and subscribe. It really does help me out. I've just recently started this channel, and so your interaction does help the YouTube algorithm push me out to similar users and similar viewers, and so it really does help me with growing the channel. Anyway, let's get back to this new graph, which is showing the institutional adoption of Bitcoin ETFs. As we can see, this was posted by Cointelegraph within TradingView. What we can see is institutions have to file a certain form. It's called the Form 13F with the SEC. So it makes it really easy to see how many institutions are buying into these ETFs. So as we can see here, between Q1 and Q2, we've actually had an increase of 262 unique owners of institutions within the Bitcoin ETF. That's a 27% increase as indicated in the title, which is a pretty substantive amount of growth if we're only talking in the span between one quarter. Annualized, I mean, that's well over 100%, which is showing, in my opinion, pretty dramatic institutional demand. So I just want to go over this and show this chart, as I do think it's really helpful to see, and it does continue the thesis that institutions are both not only starting to buy in larger quantities, but more institutions overall are starting to get involved as well. Another thing I want to show is down here, we can see the ownership as a percentage of total Bitcoin ETFs. So we can see that the amount jumped from 18 to 20%, but what this means is that 80% of ETF holdings are still sitting in retail hands, which in my opinion is a really good thing. But if institutions continue to buy up more and more supply, obviously we'll see this number go up. So, this is also another one to keep an eye on, because not only can we see up in this first chart how many individual users are buying, but we can also see kind of through this chart how many of these institutional users are really buying in good size and in good volume. So I think both of these charts are really good to reference. The final piece of information I wanted to share is this chart that shows the historical performance of the gold ETF after it was launched, and then the price of gold prior to. The reason I picked this chart specifically is because it also overlays it with treasury rates. This is important because, in my opinion, this shows the second key piece to an ETF, particularly an asset class like gold or Bitcoin, doing well, and that is the treasury rate. These ETFs can only do so well by being made available to institutional investors. Just because they are made available to institutional investors, it does not mean the institutional investors are going to buy, right? There needs to be a secondary catalyst that forces these institutional investors to look other places to then buy these types of, in this case, I would consider them store of value assets, right? What we're seeing here is when treasury rates drop, the amount of free money being made by these institutions goes down dramatically. And so what they need to do is they need to start looking for somewhere else to put their money. And obviously, if an ETF exists, that is now more institutionally available for these investors to buy. So what we're seeing right now with Bitcoin is there's an ETF available, there's institutional access now, and we are starting to see the possibility of rates being cut. If rates take a similar trajectory here, now granted, I mean, this is the course of over 8 years, so I'm not saying that this is all going to happen tomorrow or next year. This may be over the course of 1 or 2 or possibly even 3 more cycles. But what we can see is as the interest rates trend down over time, the interest and the volume, and then therefore the price of this ETF goes way, way up over that same period of time. And so I think that the current market situation could be setting up to do something similar to the Bitcoin ETF. But a nuance that I think is maybe a little bit different from a lot of what other people are saying is I think this treasury rate is almost just as important as Bitcoin being made available on an ETF, where I think a lot of other people are thinking, oh, well, it's available for ETFs, so you know, that's it. Everybody's going to buy Bitcoin now. And I don't think that's necessarily the case. I do think we need some sort of secondary catalyst that pushes investors to want to start looking alternative places to make their returns that they're looking for. So that's all I wanted to go over with you today. Hopefully you found the information in this video useful. If you did, please do leave me a like and subscribe. I appreciate you watching this far into the video. It's really helpful as far as you know, pushing me in the YouTube algorithm and helping me reach more people. If there's any other videos that you'd like to see, please do leave a comment and let me know. I do read all my comments and I appreciate hearing your guys' opinions and thoughts. Anyway, thanks, and we'll see you in the next video.